I had a subscriber reach out and ask how I determine where and when I allocate capital in my portfolio, so I thought this was an excellent question and one worth sharing my take on. I think one of the hardest things we do as investors is deciding what to buy, when to buy, and how much to buy. There is no right or wrong answer here necessarily, but there are tips and certain methods I feel help avoid losses, lowers your risks, and make sure you stay far away from impulse decisions that can be very damaging to your financial future. So I want to start off by sharing the most important thing I do before deploying my cash to buy stocks, and that is to make sure I have cash. Too many times have I seen comments where people say they wish they had more money to buy stocks, but they used it all recently. And these comments usually come after a dip in a stock they are bullish in. But just because we have the cash does not mean we have to spend it all. So patience and discipline are key here. Make sure you have a plan, set a buy price when you're willing to deploy cash, then know how much of that stock you're wanting to buy. If you think a buy price for a stock is $50 and it is at $75 currently, and then it dips to $65 and you impulsively use all your cash to buy, think how it'll feel when the stock dips to $45 and you are left with no cash to take advantage of that opportunity. I always think it's a good idea to keep some reserve of cash because you never know when another stock of yours may also dip into buying territory. So I would make a list of all your stocks, list a buy price for each, which I'm going to show you all my stocks and my buy prices for each later on in the video, and a limit to how much you're willing to buy of that stock. Maybe you are overweight in tech, so you're willing to buy less of your tech stock if it hits your buy-in price than say a financial stock you have a very small allocation towards and are wanting to boost that up significantly if it hits your buy price. So make sure you know the allocation of all your stocks and their sectors. So speaking of that, let's look at my portfolio, my sectors, what allocation they are currently, and what goals I have for them, and see where I'm at. So if we look at technology, for example, right now I have 18% allocated towards technology, but I want to boost that up to 25%. Now, disclaimer, Amazon is technically a consumer discretionary stock, so that's why it's separated below, but we can combine these and say it's tech if we wanted. Regardless, we'll just do it how it is. I want 25% goal, I'm at 18%, which means I need to boost up this portion significantly. Amazon, if we take it for what it is, consumer discretionary, my goal is 10%, which is the only stock in consumer discretionary. I am a little bit overweight at 12.4% currently. Then we have healthcare. My goal is 10%. Right now I'm at 8%, so I could use about 2% bump up there to get it at my goal. Then with my dividend equity ETF, which is just SCHD, my goal is 15%. Right now I'm just under at 14%, so a little bit of a boost needed. Real estate, my goal is 15%. I'm over because I'm at 22.7%, but I feel this is the time to take advantage of REITs, so I'm okay with this, kind of overweight here in this sector, and I'll explain more about opportunity in a minute. Energy, I'm at 0.6%, very little. I want to get that up to 5%, so I need to boost that one up. Industrials, I'm pretty much at my goal. I'm at 9.9%. My goal is 10%. Communication services, my goal is 0. That's right. I want to sell out of both of AT&T and Warner Bros., which now make up 2.5% of my portfolio. Then financials, my goal is 10%. I'm a little bit above that at 11.7%. So be sure to do this for your own portfolio. Set allocation limits for each stock and sector. Know your risk tolerances, set your goals, and stick to them. Be willing to go a little over your limits if big opportunities arise, because you can always rebalance later by buying more of a stock in a different sector. Something important is to revisit your buy prices, allocation limits a few times a year, and adjust based on your investing goals, analysis, etc. Put the work in and be confident in your decisions. Things do change, and it is okay to change as well. Just make sure it is based off of your research and analysis, not from a simple headline or from fear. Others can be persuasive, but stay true to yourself and your knowledge. So maybe you were very bullish on tech for 5 years, but through research and analysis, you see a changing trend. So you may want to change your goals at that point. Always make sure you move slowly and with tact, and stick to your goals and do not stray far away from them, as that is when you get into trouble. So it is okay to change, but just do it wisely with a high degree of conviction. The next thing is very important, and that is to take the opportunities. something I've regretted many times not doing. Right now, REITs are being punished due to the high rate environment. I know eventually rates will come down and the quality REITs will really benefit from that. So this is where I see opportunity and am willing to adjust my allocation goals. This is one example of me being willing to change due to my research and analysis. So I hold 2 quality REITs I am bullish on, that's Vici and Realty Income, and due to the current environment, I changed my allocation goal as I know this opportunity won't last forever. Eventually, I will lower my allocation goal with REITs when I deem it's no longer a buying opportunity and will start to focus more heavily on other stocks and other sectors in my portfolio to bring down my heightened allocation in real estate due to the opportunity I did not want to pass. So be willing to see an opportunity and take it. This could be due to unjustified fear in the market or a quality stock you know is being punished due to the industry but not the stock itself, macroeconomic factors, etc., etc. Too many times I see people look back and say, I knew this was a buying opportunity, but I did not take it, and that hurts. Think of tech a few years ago when it went through its massive dip, and many were fearful and either invested nothing or very little. Then the big recovery happened, and now many regret it. If you're invested in quality companies, almost always will these fearful dips end up being nothing you should have feared because in the grand scheme of things, the company was never at risk of failure. Which leads me to this, my quality checklist. This is how I avoid risk, losses, how I am confident in what I invest in. Feel free to take this and adjust it to your goals, but when I buy a stock, it has to meet this criteria. It has to have solid financials, has to have a good management team because management is the party that makes decisions in a company, has to have positive brand recognition, know your products and services too. Is it a sticky subscription service? Does it have a good ecosystem? Does it create repeat customers and that customer dependency? Does it have a wide moat? Does it have that monopoly, that competitive advantage, or something that's hard to disrupt or replicate? And then of course, if it meets all these checklists, is it at a good valuation to buy? If you buy a quality company during a dip, know what the fear is that is causing that dip and be willing to realistically measure that fear and its true long-term impact. 9 times out of 10, it's a non-issue. Think of REITs and Vici with this current dip. Is Vegas going anywhere? No. When the pandemic hit and Vegas was literally shut down, did Vici not collect rents? No, they collected 100% of rents on time. So will a high interest rate environment put Vegas out of business? No. That's how I look at things and determine that it is a non-issue for my investment and how I evaluate and take advantage of the opportunity. Now, there are cases that do deem us to be fearful and can be a situation that is cause for concern, but if you choose quality like I do from my quality checklist, you should be pretty well protected. So really it is set your goals, so your buy prices, your allocation limits, stick to those goals, but be willing to change when opportunity arises. Now again, cash-wise, I will say keep a cushion of cash for big opportunities. Anything above that, deploy according to your goals you set. So maybe keep $1,000 as a reserve and anything above that invest, but if a big opportunity hits, then by all means spend that $1,000 and build it back up again later. Now, a big warning for all of us, if you set a goal for a stock to buy at, let's say, $50, and if it hits that $50 or below, buy it. A big mistake I see is investors getting greedy at that point and telling themselves, I think it'll keep going down to, let's say, 40. That's when I'll buy it. Well, often a stock will hit your buy price and then go up shortly after, and it never goes below that price again. So trust yourself. The goal you set when you're willing to buy that stock, do from your research and your analysis, and then just do it. Just buy it. So now the fun part. Let's look at all my holdings, all my stocks. I'm going to give you the buy price, kind of my price target when I would start buying, the goal that I have for the stock, how much I want it to take up in my portfolio, and then if I'm over or underweight currently. Microsoft, I will buy if it hits $375 or below. My goal is 25%. Right now I'm under that goal by 7%, so I will add heavily should it hit that. Amazon, $150 or below is when I will buy. My goal is 10%. I'm a little overweight at 2.5%. So if it hits that, I'll add just little by little, slowly. And then Cisco, I will buy if it hits 40 or below. Now, I did not put a goal for this because I do want to sell out of this eventually, so I don't want it taking up any of my other company goals that I have long-term convictions on. Now, Vici, I will buy at $30 or below, but it is under $30, but I have a 10% goal and it's over that by 6%. So I'm pretty overweight, so I'm just gonna be adding slowly instead of heavily. I kind of have cooled off recently because I did go heavy into this one. Realty income, I will buy at $50 or below. My current goal is 5%. I'm a little overweight at 1.5%, so if it hits that, I will add just slowly. Health equity, the goal is $79 or below if it hits that. Right now, my goal is 10%. I'm underweight at 4.25%, so I will add more heavily if this hits that. Johnson & Johnson, if it hits $140 or below, I will add to lower my average, but I have no goal for this because I have determined I do want to sell this. S&P Global, if it's $400 or below per share, I will buy. It's at a 10% goal. Right now I'm overweight by 2%, so if it hits that, it'll be a slow add. Now AT&T and Warner Bros. Discovery, I'll put these together. I'll buy some AT&T if it hits 14 or below, and Warner Bros. Discovery if it hits $8 or below. I do want to sell out of these both, so I didn't put any goals for my portfolio. SCHD, if it hits $70 or below, I will buy. It's a 15% goal. I'm a little underweight at 1%, so I will add if it hits that. Fenny, my energy ETF, if it hits $20 or below, I will add. My goal is 5%. Right now, it's underweight at 4.5%, so I will add heavily if it hits that. 3M, I'll add if it hits $75 or below to lower my average, but I have no goal for my portfolio because I do want to sell out of this holding. Then Union Pacific, I will add if it hits $200 or below. Right now, the goal is 10%. I'm a little underweight at 2%, so I will add should it hit that. So this is what I would do for your own portfolio. Set up these goals, and then when it hits that, look at this to see, okay, am I going to add heavily or am I just going to kind of softly average in? Next up, my portfolio, something I share with every single video. This is me being transparent with you. I will share the good, the bad, always. So right now, my growth, I'm in the green, 16.47% overall. Just about 3 weeks ago, I was over 20%. So it has gone down. Tech's kind of been going down recently. Real estate, the REITs have kind of rebounded a little bit, but overall, let me know if you have any questions. We just went over all my allocation, my goals, but you will see in purple the allocation percentages. And again, let me know if you have any questions. I'd be happy to talk about my portfolio. So let me know what you think of my method and when and how to deploy my cash to buy stocks. What are your methods? We can all learn from each other and add or take from our current methods. It's okay to adapt and change, just do it wisely. Again, be patient. Don't let the pressure and fear of others persuade you to veer from your plan. That is when you make big mistakes, and you do not want to do that with your money that you're trying to make work for you and become wealthy. As always, happy investing, and we'll see you soon on Mark Arnold's Finance.